Let me share the screen. Hopefully you can see this one too. Let's just go ahead with backtesting or backtesting trader. No, backtesting. So the purpose of this tutorial is similar like the one that I gave you guys last time on the financial data, which is technical indicators, if you remember. We use simple average, technical indicators, and so on. So we will apply those same technical indicators with this one too, but we have a more better algorithm to help us track all these trees of stock data and come up with strategies that make them best in predicting the future, predicting the right decision before we put our money to it. So backtesting is a process of evaluating trading strategies. These trading strategies could be anything, depending on what you need. It's really dependent on you. It's a process of evaluating which trading strategy is better by applying it to historical market data. So then to see how it would have performed in the past. So historical data ይኖረናል ስቶክ ማርኬት ላይ ያሉ ቢፎር የነበሩ ዳታዎች እነዛ ዳታዎች ላይ የተለያዩ ስትራቴጂዎችን አፕላይ በማድረግ which strategy better ነው የሚለውን ኢቫሉዌት ያደርግልናል። that's what it's doing. So if a strategy works on the before historical market data, you can assume it will work on the future ones. It's just for prediction. So for getting the better prediction, it will help studying the historical market with different strategies and decide which is best. Backtesting its own Python algorithm or library that you can install and explore the stock market, the historical data through different strategies to find the right one. So it's a crucial step in the development and validation of trading strategies before deploying them in live trading. So through a well-designed backtesting logic is a critical step in the trading strategy development cycle, which helps traders, the one that are involved in this market, to build confidence in their strategies before risking every money capital they have in their live trading. So before they move on to the big game, which is a live trading, they can explore these strategies through backtesting and get the best option before taking the risk. So key aspects of backtesting, it happens on historical data, like we said. So this evaluation and everything going to happen on the historical data before we use our strategy for the live trading. The other trading strategies, this trading strategy is a set of rules or algorithms that determine when to enter or exit a trade. It's applied to historical data to generate simulated trading history. So basically, these trading strategies are just strategies that are done by you guys or by someone professional. They try to find some kind of pattern and everything through these rules or algorithms, and they test their strategy. Is it worth going forward with it on this backtesting or historical data? So performance evaluation is evaluating the performance of the strategy before deciding which strategy is best. Optimization requirements, trading strategy can be iteratively. This is just an algorithm, so you can, of course, optimize it, refine it until you get the best result. So it's really customizable. Backtesting, what is its benefits for both traders and investors? So the first is risk assessment. So backtesting allows traders to understand the potential risk associated with the market with trading strategies they are planning to go with. It helps them to understand that, to assess their strategies before they use it on the live trading. So it really helps with assessing the risks. The other is strategy validation. So with backtesting help, you can validate the strategies that you plan to use, how much effective it is or not. The other is continuous improvement, which the iterative process of backtesting, optimization, customization. It's customizing. So እንደፈለጋችሁ adjust እያደረጋችሁ strategy you can actually see its performance uh, with different strategies. So it has that option to customize it. So with customization, improvement can come and you can find the best option. Forward testing, which is successful backtesting, provide a foundation for forward testing the strategy in a live paper trading environment before deploying it in live trading. So like we said, before applying it to live trading, you are able to test the data up to maybe if you are planning to use it for the trading that are going to happen tomorrow, you can test your strategy till today. So of course the market can come very high tomorrow or very down tomorrow. That is the risk that you take. But the thing is, you'll have that option. That is some exceptions. Most of the time, the market of trading is prediction pretty much. So you try to guess the next day by studying the one before it or the first day. So there is no any guarantee, but still it's better to have this mechanism to the very least to test your theory or your strategy before moving forward. So these are trading terminologies. I did share them on the last tutorial as well. So I don't have to repeat them, but these are the common strategy trading terminology that it is in the stock market. I'm sure you guys are aware by now. So let's just move on to the technical analysis. So in trading, investing, in finance, and there are two analysis types. So the one is fundamental analysis and the other is technical analysis. These two approaches used in financial market. These two branches are popularly used in the financial market to evaluate and make investment decisions. Fundamental analysis focus on the quality of the asset. So which is most banks do, which they focus on how quality is your asset to do something, to do anything regarding it could be a loan, it could be anything. It focuses on how valuable is that asset is. Whereas the technical analysis looks at the market trends, which you are doing. So in the stock market, the analysis step that is happening there is a technical analysis, which looks for patterns, trends, just to make a better potential future prediction. Technical analysis focus on studying that historical data on the marketplace. So key elements which is our focus on this particular tutorial. So what are the key elements technical analysis include? One is identify and support a resistance label. So what are the supporting resistance labels in the financial term? What are these terms? This is the definition. Support is a price level where a down trade. So as at some point of the market trading, where can be expected. So downward in the financial world, it's expected to pause due to a concentration of demand. So price የወረደ ሲሄድ it is expected የገዢ ፈላጊዎች ብዛት ይጨምራል ተብሎ ነው የሚጠበቀው። ምክንያቱም ፕራይሱ እየቀነሰ ከሄደ more likely more concentration of demand ሊኖር ይችላል። So as the price drops toward the support, buyers become more inclined to buy, while sellers become less inclined to sell. ሴለሮች መሸጥ አይፈልጉም ፕራይሱ ሲወርድ፣ ባየሮች ደግሞ መግዛት ይፈልጋሉ። This is what the support level means, and the resistance is the opposite of that one, where ፕራይሱ እየጨመረ በሄደ ቁጥር it's expected to cause to a concentration of supply, which means so as the price rises towards resistance, sellers become more inclined to sell, but buyers become less inclined to buy because it becomes really expensive. So few buyers will have the capacity maybe to buy it or not, but at some stage it will just stop because the price is higher. They are no more better, so it will just be on that pause level waiting to be bought. So these are the levels definition, the literal definition. And the other is element that exists on technical analysis is analyzing chart patterns. So if you see this market uh, sites and everything, they have these chart patterns. Even this chart pattern are something that you guys can also plot and to see, trying to understand how these patterns um, are there or translated through the chart patterns. So this is one term with technical analysis. The other is technical indicators, which we have discussed before, which are algorithms that helps you to find trends between prices and so on. So they have different definitions, different for different purpose. So these are the technical indicators. The other is the goal of technical analysis is to identify opportunities, when to buy or when to sell an asset. So market behavior, at the end of the day, we are studying the behavior of the market is to decide whether we should buy sell our shares or whatever we are on that market, or where to buy others, so to increase our share on that stock market, or depending on the market type might be different the term, but that's ultimately the goal, either buying or selling. So technical analysis analysts, these are the persons who do this analysis, use different various charting tools in mathematical models to analyze the data, the market data, and make trading decisions. So that's their job, which is your job for this project as well. So this is one of the indicators, simple moving average. There are a lot of them. Was just mentioning some here. This indicator, this technical indicator, is the most commonly used technical indicator in the financial market. It calculates the average of a set of prices. Maybe it could be from some day to some day, from maybe the 10th to the end of the month. It could be anything. That range depends on your analysis. So basically what they're doing is they will take the average of those prices over a specified number of periods, that is time or date, and it calculates the average and try to see, the changes before. That helps her to come up with some conclusion for deciding something. So the SMA represents the average price over time, and it's the simple moving average over a series of periods in backtracer strategy provides valuable information about the overall trend. So በተለያየ ስፔሲፊክ ፔሪድ ኦፍ ታይም የሚሰራው ሲምፕል አቨሬጅ indicator calculation will help to get that information, how it's like the overall trend, or how it's the overall pricing was look like from some period of time to some period of time, which helps to come up with some solution or some, not solution, but decision. So whatever the number comes, you can decide what to do. So this is just a syntax. SMA indicates a simple moving average calculation. So if the close is again the terminology that indicates the closing price for that particular date, or particular date at that time. So this means if the closing price is greater than from the average calculation, it means that the closing it can be interpreted as a potential buy signal. So if the closing price is much greater than the moving average that's calculated over a period of time, it could be indicated as a potential to buy signal. It could show that the pricing is going well, and the demand is good. So it can be interpreted as a buy signal. If it's less than, it could mean it's time to sell whatever that you're selling on that market. If they come equal, it means that it's better to hold it, either to sell it or buy it, just to wait uh, at that level, on just hold your stock or your share, and so on. So these are just information that you can find by reading upon each particular indicator and what they meant. So what does that value mean? You can I have there's a lot of references on this that's shared by the academy as well. But just after you calculate it, make sure to really understand what that value means for you or for the business that you are doing. So that's all about the technical, analysis process. This is just to remind you about fiat currencies. What are they? So fiat currencies such as the US dollar, euro, all these many currencies that we know are government issued. So they are known by the government. They are not, legal, that are not backed by physical commodity or like gold or silver. So they are government issued, but are not backed by a physical commodity like gold. So behind them, there is no any physical commodity happening. Like, the usual trading money is gold and silver, right? Before the money printing comes. So they are not backed by that, but they are government issued. This particular fiat currencies derive their value from face and credit of the issuing government. So basically, we are trusting the government to give that particular print money a value. So if the government decided $1 means nothing, then it means nothing. There is no any backup actual, value like gold and silver being attached to it. So it's totally between having a face on that government that particular printed money has, or that particular currency has a value. Rather than the value the physical they're made of. It's just the current size. Before, I don't know how many years ago, but before, even the printed money is backed by some gold or silver. So because ours actual values, this nature minerals, gold and silver are the actual. The one that we are using currently is just a printed paper, and that we are using it, trusting the government. So that is the information you should know in the part of the era of finance. The value of currencies is largely influenced by factors like economic stability, monetary policy. This is something that you guys know. Fiat currencies are the predominant form of money used in the global financial system. It's something that we use currently every day for every transaction that we're doing. When it comes to stock market, this is just general information that I'm sharing here. The stock market is a financial market where publicly traded companies shares are bought and sold. So every company, especially the one that we know, even that it's about more selling their shares and buying shares. This is just a loophole that they do on the shares of the company. So that is what stock market is. It's a platform for investors to participate in the growth and performance of businesses with the potential of capital appreciation and dividend income. So you already know that if you have a question, you can ask, but that is what stock market is in general. And there is other currency type, the modern world has brought, that is cryptocurrency, where cryptocurrencies are not physical at all. They are digital virtual currencies that are secured by a cryptography algorithm which operates on decentralized network, opposite to fiat currencies, which are totally controlled by one government, one state. But with cryptocurrencies, they are the opposite of that one. They are not controlled by anyone, by a centralized network. They are just everywhere on the nodes of the network. So the first cryptocurrency that was launched in 2001, the first cryptocurrency ever was Bitcoin. It started through from Bitcoin. Now we have different types of currencies that are being traded, transacted around the world. So Bitcoin is still the number one coin. Its value is really high. Sorry about that. So cryptocurrency offers alternative to traditional fiat currencies with potential for faster, cheaper, and more secure transaction because it's not owned by anyone. It's more secure because everyone is aware where each coin is going. Okay, sorry, just sorry. Just one moment. Sorry about that. Let's go back. So this just are general information that you should know the types of currencies that we have right now and that are used for transaction around the world. So you should be aware of them and how they operate as well. So we have talked about exploring historical data to do, test our strategies and decide on the right strategy. And we have frameworks to do this. And one of the frameworks that we have is called Backtrader. So this framework is something that you can install like you would any framework like React, StreamData, and so on. And it gives you this platform set of codes to call these indicators, to write your own strategy that's customizable and passes through the trader, and it will do the behind work of the calculations and so on, and provide you outputs that you can explore and come up with some decision to how your strategy is performing. So it's a popular open source Python library that you use for backtesting and trading strategies. So basically that's what it does. It really a framework to analyze your historical data through your strategies and technical indicators and so on. So Backtrader is known for its performance, flexibility, and extensive documentation, which you can go ahead and refer. They have a really extensive, really running code examples that you can explore. It's really, the documentation is really good. So we're going to see some examples from their documentation because they have a really throughput documentation. You can just copy paste to your Python module and run. So we'll see some demo on this one. There's also other frameworks, of course. There is like Backtrader. This is another one. Does the same thing. It does analysis on historical data and give you some output to explore. Outputs here to help you decide the right decision. This is also another one. So I'm going to link these two if you are interested to explore them. They all are Python. They have different pros and cons, but they pretty much do the same thing at the end of the day. So you guys can explore them for better performance, but we were going to focus on the popular one, for this demo, which is this one. So I'm gonna just walk you through this one. So before this, for the installation, what basic requirements, it needs this one. So it runs understands to Python versions up to 3.5. So you should be aware of that in case there's some version dependency error that's happening on your end. Make sure to repair their documentation. So just do pip install Backtrader and you're good to go. And if you want to plot your results, you need to install it through this one as well. So it uses Matplotlib library inside with versions above this one. So it gives you more features to plot as well. Let's just go through the quick side. So I'm gonna just guide you through the documentation. Because they already shared the result, we don't have to run it. But if you want, you can run it as well. But it's the same thing. You did the same thing. I think I already have run some of them here on the trader. So make sure to have your own. You probably will have your own CSV files that's provided, so you can explore on them. But let's go through the documentation here. I'm just going to mention 1-2 examples and how it's trying to do the analysis. So this is just this Cervero, the instance Backtrader use. So you need to feed information to the instance, and just by writing this .1, it will run your strategy, your indicator, whatever you give it, it will run it as long as you do this one. So let's just move to a real example. So when you are, for example, joining a trading market, you will have some cash flow, right? You will have some initial capital. So it gives you that imagination here. That's what it's doing. You can actually set a cash value here. It could be any number, but for this sample example, it assigns $100,000, but you can assign more if you want. So you actually are, hypothetical capital. If I have this kind of amount, and if I do this strategy on this historical data, how much my cash will become at the end, and so on. So you can see actually these differences on your initial capital with customizing it continuously as much as you want until you get the right your desired output. So in this particular syntax of Backtrader, you need to import it like this. You can set your initial capital. Here, that's what it's doing. It's just setting the initial capital. And now we are adding the data, the historical data. So how you add it is also defined here. So for this documentation, they are reading from their own, data set, but you can read from your CSV file or whatever file you have. You just make sure to assign it you write the right path. It will read it. Again, it's used by Yahoo Finance. Functionality here that is already attached with the Backtrader. This BT is the Backtrader assignation. So it has access to this particular syntax and just pass the data pass, and that's it. This is something that you need to also adjust from date to date. So from which date to up to which date are you planning to explore the data? Make sure to define that based on your data information. Then here you are adding the data to the Cervero instance. You already set the cash to 100,000, and when you run it here, there's nothing much you will see. You'll see the same thing. That is the initial cash flow and final flow, because you haven't put any strategy here. It's just reading the data at this point. Now let's create our first strategy, which in this case is just reading the data, the close values right now. So it's just logging at this stage, the strategy is printing the closing price from the data set. So once you define your class of strategy, you need to pass it again with the other strategy of the back trader. Uh, Pass the class name, and it will follow this whatever you write algorithm that you write here. It will follow that to apply it on the data and do the calculation behind the scene. So the same thing here. Now we're just printing the close values from the data set. Now there's some here on this side, it's adding some logic to the strategy. So it's reading the closed data, but here is where the strategy is happening. It's saying that we should suggest the buy option, which is buy that stock or whatever it is, buy that stock when the three consecutive prices, the closing prices are declining consecutively. So here, for example, you see three right? This is 1, 2, 3. So it's checking the data. So if the first one is less than the second one, and the second one is less than the third one, then on it's suggesting that it's time to buy that particular closing price. With that particular closing price, buy it. So that is a strategy that it puts. It could be a wrong strategy, but it's still a strategy, and we are testing that strategy. So basically, after the search, if the three consecutive closing prices are less than from each other every time, then we are suggesting it's time to buy with that closing price. So the same thing, the strategy has been passed, the data has been passed. Now we're running the back trader instance, and this is what it creates. So every time the first three closing prices are less than one from the other consecutively, then it will suggest it's time to buy the stock with the last one. So it's now lower than the first two. So buy with this closing pricing rate, the particular stock. So by default here, as long as you haven't put the stake amount, it will assume you are buying one stake with this particular closing price. So you can adjust that if you want to assign. If I buy the stock with this stake volumes with this particular price, you need to assign that. But if you haven't assigned that, Backtrader will assume you are giving it one value. And plus with the cash flow, if you haven't assigned your own customized price capital value, it will assume it's 10,000. So that's something you should know. It has its own default values, it reads, but if you don't want them, you can override them. So like this, now we have this strategy being run. So we have both, there are a lot of data inside that we haven't seen, but all those buying prices now decrease our initial capital a bit lower. It's expected because we are actually buying from our initial capital, but the thing you need to remember is we are increasing our share value though. With this pricing, we are buying actual stakes. So our stakes are increasing, but our cash value might be decreasing because we are spending money. So this is what Backtrader does. So it gives you this opportunity to put your strategies inside. And it applies it on your data. I'm sorry for today about my voice. I feel like I have been coughing on you guys. I'm sorry for that. But hopefully get the idea of Backtrader. So I'm gonna leave the rest of the demo for you guys because documentation is really descriptive and the codes do run. I just take them, so you don't have to worry about that. You just replace them with your data, with your strategy, and choose the right one. So here, this here, they have a syntax in case there is a commission. So since brokers exist on market data, if there's commission with some pricing purchase happening, you guys can consider that as well. If you don't have one, just leave it empty. But if there is a commission that is going to be paid for some traders, you can include it to your calculation to have every little specific values for you to help you decide. So make sure to explore them. But do you guys understand the idea behind back tasting? Is it clear? Okay. I apologize again for the constant cutting. Okay, so I have shared the slide and the references also attached. Make sure to explore them. Right now you have seen the customized logics, right, strategies, but you can actually also call the technical indicators. So backtesting, the backtrader framework does support all the framework that the technical indicator that you know, including the simple moving average and others. So you can just call them from their syntax. So just make sure to refer their documentation. You can actually call those indicators through the strategy, and they can do their own calculation as well. Okay. So if you have question, you are welcome. But if not, we can move on. Is there a question, a concept that you want me to clarify? Please ask. Okay, so does this mean you guys don't have any question? We can in the session. Can I get a reaction for that? Or in that case, I will end the session